Hi, everybody, it's FIBO Group, and you are watching to the Market Watch review. Stocks fell to their lowest level in 2 years on Friday, while bonds suffered their 8th weekly loss as investors weighed the possibility of a much more aggressive rise U.S. interest rate. Asian markets declined 0.5 to 1.7%. European stocks became a seared red again today as a result of losses in everything from bank stocks to natural resource and technology shares. S&P futures on E-mini fell 0.3%, suggesting a weaker start to Wall Street later. The dollar reached its highest level in 20 years this week, as the U.S. rate is expected to rise faster and remain high for longer. As yields have increased, gold has been under pressure, especially in the last quarter. It was at $1,645 per ounce. Friday's drop in oil prices was caused by fears of rising interest rates and a stronger U.S. dollar. West Texas Intermediate crude oil futures fell by $2.93 or 3.51%. Asian Pacific market. After the Bank of Japan intervened in order to purchase yen for its first time since 1998, the yen has been dominating the market spotlight. Markets will continue to monitor for signs of tensions rising between Russia and the West. Yen continues to consolidate. The S&P/ASX 200 in Australia fell to its lowest level since July after returning to trade on Thursday. It then recovered some losses and closed 1.87% lower. The Australian dollar plunged to a new low against the greenback. Market of Europe. Kwasi Kwarteng, Britain's finance minister, unleashed historic tax cuts on Friday and massive increases in borrowing. This economic agenda floored financial markets with British government bonds in freefall. Kwarteng eliminated the country's highest income tax rate. The pound was at a new low of $1.01, a record for the past 37 years. After data showing that the German economy was in decline in September, the euro dropped for the fourth consecutive day. This is due to a spiraling inflation and unprecedented energy shortages. Market of America. Goldman Sachs has lowered its target year-end 2022 for the benchmark S&P 500 index of about 16% to 3,600 points, while the U.S. Federal Reserve shows no signs of slowing down its aggressive rate hike policy. Portfolio managers think that the Fed must raise rates so high that there will be a U.S. economic recession in 2023 to curb inflation. The Canadian dollar reached a new high on Friday against the U.S. dollar. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.